All right, let's talk about one of the biggest head scratchers in finance right now. Wall Street's sudden and very dramatic change of heart on cryptocurrency. For years, they told you it was poison. Now they're practically rolling out the red carpet. So what is really going on here?
For years, the message from the giants of finance was super clear. Stay away from crypto. They called it risky, they called it volatile, they said it was totally unfit for any serious investor. And now, those exact same institutions are telling their clients to put a chunk of their portfolio into it. So the big question is, why the massive 180?
Okay, so to really get what's happening here, we've got to look at just how wild this contradiction is. We need to put what they said then right next to what they're doing now.
I mean, you can't make this stuff up, right? On one side, you have these official warnings from the past, loaded with really dismissive and even kind of moralistic labels. And on the other side, you have the reality of today, a concrete, strategic recommendation. It's the classic, do as I say, not as I do. Well, until the doing suddenly starts making them a whole lot of money.
All right, so let's hit the rewind button. Let's look at the evidence. What were these gatekeepers of wealth actually telling everyone just a little while ago?
Just think about the words they chose here. This wasn't just them saying, hey, maybe be careful. Calling Bitcoin a polluting instrument? Wow. That's not a financial critique. That's a moral judgment, right? The goal was to frame crypto as not just a bad investment, but as, a fundamentally bad thing. Period.
And look, that wasn't just some one-off comment. No way. The official line from all the major wealth managers was this constant drumbeat of caution. They hammered home the same talking points over and over. It's way too volatile, it has no real value, and hey, the government could shut it down any minute. That was the story they pushed to millions of investors.
Okay, so that was then. Let's fast forward to right now. After all that fire and brimstone, you'd think these guys wouldn't touch crypto with a 10-foot pole, right? Well, things have changed. A lot.
4%. That one number, it really says it all, doesn't it? You gotta understand, in the super conservative world of wealth management, a 4% allocation isn't just some casual suggestion. It's a huge stamp of approval. It's a signal that this asset has officially gone from the crazy fringes right into the mainstream portfolio.
And just look at who's doing the flip-flop. We're not talking about some small, scrappy fintech startups here. We're talking about the absolute titans. Bank of America, Vanguard, Schwab. These are the pillars of the old-school financial world, and now they're all helping their clients get into crypto.
Okay, so we've got the what down, this total 180-degree turn. Now for the big part, the why. What on earth could make these institutions do such a complete U-turn?
Seriously, try to put yourself in their shoes. For a giant bank, your reputation is everything. So why would you risk looking like a total hypocrite, or even just wrong, with such a public reversal? Well, like most things in finance, the answer, of course, comes down to business.
And it turns out there were basically three massive forces pushing them, making this reversal almost a sure thing. First up, you had overwhelming demand from their own clients. Wealthy investors were watching crypto go to the moon and they wanted a piece of the action. You don't say no to your biggest customers. Second, the game completely changed when Bitcoin ETFs got the green light. Suddenly, Wall Street had a regulated, familiar product they could sell and make money on. It's like a safe little wrapper for a wild asset. And finally, it was just pure old-fashioned competitive pressure. If they didn't offer it, their clients would just take their money and walk across the street to someone who would.
So, okay, mystery solved. It was a business move. But what does all of this actually mean for us, for you and me? What's the real takeaway from this whole saga for our own investments and the future of money? I think the best way to look at this whole thing is through three different lenses. First, there's validation. Love it or hate it, when Wall Street gets on board, it makes crypto look legitimate to the rest of the world. Second, motivation. This is a huge reminder that their advice is always connected to their own profits. It wasn't that crypto suddenly became a better asset, it just became better business for them. And third, this is a huge indication. This whole thing isn't just about Bitcoin. It's a flashing sign that the entire financial world is being forced to change and adapt to new technology and new investor demands.
And that brings us to the final and maybe the most important question. For years, right, the gatekeepers of the financial world, they set the rules. And the rule was, don't play the crypto game. But now, they're not just playing the game, they're trying to rewrite the rules to their advantage. So the real question you have to ask yourself is this. When the people in charge suddenly change the rules and tell you the thing that was bad is now good, do you just follow along or do you stop and ask why?